Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom. G'day guys, this is Jackson Milan, the Wealth Mentor, and we're back for another episode of the Financial Freedom Secrets Show. And I'm very excited about this episode as it has been a space that I've been interested in for a while, but kind of my best judgment had parked the idea because I thought it was too complicated and I was too busy in my business to even explore this subject. And the subject that I'm talking about is property development. So I'm very excited to have a new friend of mine here today, Amanda McEwin, who is a seasoned property investor and property developer and now teaches individuals how to implement this strategy so they can build wealth and create financial freedom faster. So Amanda, thanks for jumping on, mate. How you doing?
Yeah, well, thank you. Thanks for having me.
My absolute pleasure. So let's start right at the beginning. Do you want to tell us a little bit about you and your story and what got you to where you are now?
Yeah, sure. So my property, wealth creation journey started in 2010. So it was the arrival of my third child. I had a 15-month-old and 2.5-year-old, and for some reason, crazily had a newborn thrown in the mix. And I had taken maternity leave, and my husband was saying, okay, look, Amanda, I think we should invest in property. And I was thinking, you've got to be nuts. Like, I've got 3 kids under 2.5. But he actually planted a seed that day that slowly popped through the surface because I had to go back to work each time between my children. And I had to drop my kids to childcare, and it was absolutely heartbreaking. I was missing the best hours of their day, and I'd pick them up exhausted after rushing out in the morning, dropping them off, picking them up exhausted, putting them to bed, and rinse and repeat. And I wasn't doing anything that really inspired me for work either, but I had to work because we had a big, huge mortgage. And so I think one day I remember just missing another milestone of my youngest, and I just thought, you know what, something's got to change. And I remember the conversation that my husband and I had about investing in property. And I thought, you know what, I'm just going to look into it a bit more. So that's what I did. We started investing in property, buying and holding. And I started educating myself, learning about the strategy, bought 3 properties in about 18 months. And then we hit the glass ceiling. We couldn't actually buy any more property. But what also happened is I was looking at wealth creation strategies to release me from my job. And with the investment properties, they're actually tying me to my job. So I felt even more trapped and more pressure, juggling my young family and having to go to work and now managing the debt of 3 investment properties too. And so that got me asking questions and starting to learn more. And then so I started renovating, and I'd buy a unit, spend 4 weeks renovating it, and then flip it back on the market. And I was banking 20K here, 40K here, 60K here. But it was fun, and it's lovely turning an ugly duckling into a beautiful swan. But I was also still having to work and juggling this renovation. And anyone who's renovated know how time-consuming it is, having to be on site, manage trades, get supplies, and it almost created myself another job when I was already time poor. And it was great banking that money, but it still wasn't life-changing enough for me to be able to leave my job and to be able to get rid of that mortgage. And so I kept on investing in myself, and I was learning about strategies, how to try and find deals off market because I was looking for a reno deal at the time. And then I got exposed to property development, and I thought, hang on a second, who am I to do property development? I'm a mum. I've bought some properties. I've done a couple of renos. I mean, property development's for the big guys, right? You have to be a property magnate, drive a fast car, and have bucket loads of cash. And that wasn't me. But it was interesting because we went to an education seminar, and we spent $40,000 on learning how to do property development. It was just crazy. But when I got explained the whole concept of it, it just seemed like it made sense. Be able to do a property strategy, and I love property, but a strategy that didn't take a lot of time. I was able to do it on the side of my business. But the best part was I was able to potentially bank lump sum profits in a shorter period of time that could really change our financial circumstances significantly. So I thought, you know what, I've got to try something different. I can't keep doing what I'm doing. So we invested in ourselves, learned how to do property development, And we were learning the big end of town at that stage. And I was thinking, hang on a second, what am I doing learning the big end of town of property development? I'm brand new to this. So what I then did is took those strategies and applied them to small scale property development, which is what I do and teach. So when I say small scale property development, I'm talking about getting a block of land. You know, when you drive around and you see a block of land with 2, 3, 4 houses on it. That's what I do. It's not big scale. It's smaller end of town. But the amazing thing was it was still lucrative, like still be able to bank 6-figure profit. So I took the education, I started finding deals. And so when I invested myself to learn property development, that was 2013. And 40 grand was a lot of money. We didn't have a lot of money then. So we drew on our mortgage to pay for that education. And I said to myself, I wanted 10 times return on my investment in 24 months. I was focused. I had to get out of my job. I couldn't keep doing what I was doing. And so we found our first deal, which was supposed to be just a simple 1 into 2. It ended up being a 5-site deal. And so we secured that deal the end of 2013. 2014, we banked that deal. 2015, we banked it. $447,000 from our very first development.
Wow.
And that took a massive chunk out of our mortgage. I also found another deal during that time when I was building that, which banked 6 weeks later. That was another $187,000. So I banked in 2015, 18 months after making the decision to start doing property development, I banked $680,000. Our mortgage was gone. I was able to leave my job and do property development full time. And everything changed from that moment, because when we paid off our mortgage, what I didn't realize is, and you would know this well with the area that you're in, Jackson, is when you pay off your mortgage, it's like an instant payday. You accelerate your income so much faster, because that chunk that's going to the bank every single month is suddenly in your bank account. So not only have we cleared massive debt, got the bank off our back, we had more cash. And it was life-changing for us. So that gave me the confidence to then, so I left my job, and then I was doing a couple of deals at that time. And then my boss from my last company that I was working for, he retired as a young guy, built up an IT company, cashed out with a lot of money. And he came up to me and said, "Oh, Amanda, do you reckon we can do some joint ventures together? Like do a project together. What you do sounds amazing. I'd love to get involved." And I was like, hang on a second, that just sounds really risky. I had my limiting beliefs on. I thought, no, I'm not sure about that. Anyway, he's an ex-salesperson, so he's persistent, and he kept chipping away and said, "How about this? And can I please get involved? Can we do it together?" And then I gradually opened my mind to that and started doing joint ventures with him. And we've now done, I think we're up to our 9th joint venture. We've just banked one recently. But what that did, it accelerated our growth a lot more, because it enabled us to do, instead of just doing 1 or 2 deals, we could now do 3 or 4 deals. And that sort of grew our wealth very, very rapidly. And so we're in the fortunate position to be able to clear off our mortgage. I've now been doing this for 8 years. In that time, clear off a mortgage, pay for and build our forever dream home, take our family on holidays every single year overseas, outside of COVID, of course, but just have choice. And as I was doing, so in that time, I have completed, now I'm getting up to my 19th project. So in 8 years, I've created over 70 homes across 19 projects. Every single project has banked us a 6-figure profit, and it's created 7-figure wealth. And during that time, I had many people asking me, what are you doing? Like, how are you doing what you're doing, and making the decisions that we were now able to make? And so that then got me opening my mind to helping other people do the same as what I've been able to achieve. And that made me create the Rising Star Developer, which I launched in March of 2020, right when COVID hit. So it was chaos time, as we all know. And so I've been really fortunate enough to be able to now teach hundreds of students, educate thousands in how to use the same strategy that I'm doing day in, day out now. I'm actually in the trenches doing developments right now. I tend to have 3 to 4 projects going on at any one time. But the amazing thing about property development, one of the many amazing things about property development, and a lot of people roll their eyes when I say this, but it takes me 3 to 5 hours a week to do 4 projects. I do it on the side. My main gig now, because I got a bit bored just doing a couple of projects and being at home, I thought, okay, what's my next challenge? And that created the Rising Star Developer. Most of my time is spent now supporting my students, and I just spend my 3 to 5 hours keeping my deals going along. And really interesting story. A couple of in November 2023, so I'm not sure when we're playing this, but this year, a few weeks ago, I just banked a 7-figure profit, my first 7-figure profit in one single deal. And I remember it was amazing. I settled on a new deal on the Monday. I banked a 7-figure profit on the Tuesday. And the incredible thing was, I got to the end of that day and I had a coaching call with one of my students. And I reflected on that day and I went, you know what? We've achieved another massive financial milestone. And you know what the highlight of my day was? Was spending that half an hour with my student and helping her navigate through some challenges around getting into her first deal. And it was really quite enlightening for me, because it made me realize that I love developing and I love creating homes for people and I like making money, but the joy and the satisfaction I get is now from actually helping others and making a difference in their lives and seeing them pay off mortgages and leave their jobs if they want to, and the lifestyle they're able to lead just by making decisions or backing themselves and choosing this strategy.
That's beautiful, mate. It's so powerful, and I resonate with that so much. I would do what I do for free if I could, and the reality is it's the impact that you create in others by giving them these skills, which is the most fulfilling part, which is amazing. But your story is just phenomenal. It's a dream for so many people, right? And it seems like it almost sounds too good to be true, because I know from my experience, I've seen so many individuals, business owners, professionals who've built a certain amount of wealth and then try to foray at property development. And it is a risky space. We see that it is, for many property developers, can be boom and bust. It's a great way to manufacture wealth very, very quickly, but it does come with a lot of risks. So with that being said, calling out kind of the elephant in the room, where do people get it wrong, particularly first-time or amateur property investors, where they end up losing their shirt?
Yeah. The very common thing that I see that happens time and time again, and I actually end up getting a number of these unfortunate people coming into my program, is they don't educate themselves first. So it's crazy. It's like you wouldn't go and build a car without learning how to build a car. You would not go to a courtroom and argue a case without understanding the fundamentals of law, right? Why some people drive around and see these developments and think, okay, you know what, I'm just going to go and buy that house. I'm going to put 2 on there and I'm just going to build a house. They may have built their own home before, or they may have seen somebody else do it or talked around a barbecue and heard about this strategy being so amazing and just thought, oh, yeah, I'm going to give it a crack. That is the number one issue that I see with people who go south. Because if only they had invested in themselves just to learn the fundamentals, right? Fundamental being do a feasibility. No, you don't even buy a site until you've done a feasibility and you know that project is financially viable and you have buffers in place to make sure that regardless of what surprises happen, and surprises do happen in development, that you are still going to make money and you're not going to lose your shirt. So education is unbelievably number one. And then the second thing is not knowing numbers, which I guess ties into education, right? Not being conservative enough with your numbers, having buffers around your numbers as well. Because yes, we're creating homes and property development, but it's a numbers game. And you don't get your numbers right, and you don't manage risk, which is probably the third thing, you can end up losing your shirt.
Yes.
Number 3 is I'm married to a very, very risk-averse husband. And you probably come across this in your field as well, where there's always one partner who's really ambitious and the other one who's may have ambition, but it's, a bit scared and a bit risk-averse. And so I'm married to one of those. So we have some very interesting conversations at times when I've got a deal. I'm going, let's just go and do this deal. And he's like, hang on a second, Amanda, have we managed the risk? Have we done this and this and this? And as frustrating as it is, we end up meeting in a middle ground, and it's the right ground because he pulls me back and I lift him up, and then we manage all the risks associated with a project. And ironically, I'm sure, and he probably laughs every time I say this, one of my key philosophies is risk first, profit second. So I have incorporated all those risks that we manage as part of our own projects And everything I teach has got a very strong risk element. So I run through risks of securing the site, making sure that you're designing the right site that's going to sell, managing planning risk, managing finance risk, managing construction risk, managing settlement risk. Like everything I teach has got a strong risk element. And it's not to scare the pants off people. It's to say, you know what? When you're aware, you don't know what you don't know. So when you are aware of the risks to manage, and you can't be aware across every single risk, but the majority of the big ticket risks, when you know what they are, then when you're going out and looking at the deal, you can go, okay, yeah, well, here's my due diligence checklist. Has this site got X, Y, Z? Tick, 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 tick. Okay, I've managed that risk. My finance, have I got my buffers in place to make sure that if I get a surprise during construction, that I'm still going to be able to finance that? Sales strategy, how am I going to get out of this project when I get into it? Always starting with the end in mind. So they're just the philosophies that I teach people, and I do day in, day out with myself. So just circling back, with the three things is education, people not knowing what they're doing. They just see something around and they don't even know to go and check a development plan to make sure that what you can do can still be done. Secondly is not knowing numbers. And thirdly is not just being aware of risks and how to manage those, and not thinking of risk first, profit second.
Makes a lot of sense. Yeah, cool. And look, I think the interesting thing right now is, as we know, anybody who watches the news can see that there is a shortage of property Australia-wide. They're importing a lot of international migrants in order to fill the skills shortage, but they don't really have homes for them. So I think it's a great opportunity to develop. But from my little understanding here, there are a lot of developers that are struggling to make margins because of the cost of building, the cost of materials. So as a small scale developer, how do you make margins in an environment like this and make sure that you do have profitable projects, obviously above and beyond just doing your feasibility?
Yeah, so one of the key components of making sure that you can weather a storm, whether it's based on the challenges we've had the last 12 to 18 months. And look, every single year has a different challenge in the construction industry. So we had COVID a few years ago where the whole market was shut down. And then we had this huge boom where there was a massive material shortage. And then we've had a labor shortage. So every single year, and prior to that, right, depending on your market, was a GFC, so there's always different challenges, right? So us as developers need to make sure that we don't have crystal balls. We can't look into 12 months to 2 years down the track to know exactly what's going to happen. But what we can do is make sure that we build contingency in our projects so that if we do get a surprise, if, for example, we go to sell our product and the market's moved and it's dropped, we're still going to make money. If we end up having our projects that are delayed and they take 6 months, 12 months longer because of labour shortages, material shortages, we're still going to make money. We're not going to lose money. So contingency is a really key part of that. So when we're looking at a project, we want to manage our risk, but our numbers are key. And if we don't have our numbers right and manage those numbers carefully and manage our money and make sure we've got buffers in place and have the relationships to support that, then that's where things can go south. So what's been interesting and in the last couple of years, so all the projects that I've been doing certainly have been delayed because of all the constraints that we've had. But what probably is underestimated is what's happened with the increase in property prices. So my projects that have been 7 figures, they weren't 7 figures when I bought those sites. So yes, we've had a lot of constraints and we've had a number of projects where in my feasibility, the build cost has gone up 15, 20K because of whatever circumstances happened. But so too is the end sales price, right? So, but either way, even if the price had gone, even if the market had gone the other way, right, I still had plenty of fat in my feasibility to know that if my feasibility went from, say, 400,000 down to 200,000, losing $200,000 sucks, right? But I'm still okay with earning $200,000. So, exactly. And that's when you understand how to crunch numbers and how to do numbers on a deal. That's how you can manage those risks. So that way, I speak to some people and they go, as long as I want to do a deal and, as long as I break even, I'll be okay. So no. We don't go into deals thinking about break even. If we don't have enough fat in our deal with a serious profit in there, we don't even consider it, because if you get given a curveball, which is more than likely you will get some sort of challenge, then you've got no room for move, and that's when people lose their shirts. So that's probably a key.
And this is obviously why building companies like your Porter Davis they only failed because they had such razor thin margins and were doing such high volume and had such little liquidity. And it seems to be a very different value proposition than, say, a volume builder with low margin, right?
Yeah, that's right. And also, raising another elephant in the room, the challenges with builders going under, particularly the last 12 to 18 months. And I have very open and transparent conversations with my builder regularly. And I encourage that with the way I always teach my students about how to build the A team, how to choose the right builder, because it's not just about any builder. It's
Yes.
specific things we look for. We want a builder, and financial viability is certainly one of those. And the last 18 months has been really, really challenging for every builder, regardless of how much liquidity they have, with the nature of projects being blown out, insurance caps, and projects taking too long, and all that sort of stuff. So if you don't have a good financial backing or know how to manage your cash flow, then that's going to put a lot of strain on a lot of businesses, as it has for many businesses. So even regardless of if we're part of the constraints or the challenges that we've had the last 12 to 18 months, the way that I choose builders hasn't differed, regardless whether it's 5 years ago or now. Like, there's key fundamentals in development, and when you're choosing a team, that apply regardless of what market you're in when you know what they are. So choosing the right builder, and the same with choosing the right money partner and investor and anybody, the life partner, right? We want to make sure we make right decisions to help us move forward, rather than having a rocky ride.
Yes. And I think the hard part with a lot of that is that you don't know what you don't know, right? And if you don't have somebody who has that level of experience to help you ask the right questions or do the right due diligence, a lot of those decisions are made on gut feel, and that's not the best way to make these kinds of decisions, right? So I think that's super critical, to make sure that you've got that experience, or you're surrounded by people who have that experience who can provide it to you. Absolutely. So I think the big question here really is, this seems expensive in terms of getting into development. You've got to buy a site. You've then got to be able to front the development cost. You've got to be able to raise funding or get money from a bank, whatever that might be. So is there a minimum amount of cash or equity that somebody has to have to even consider this as an option?
So with development, it's the amount of cash you need is as little or as much as you have. Because with development, if you want to be able to do a deal in your own right, so the first step that I have with my students is firstly working out your financial capacity in your own right. So understanding what your equity is and what your debt is. And you'd go through this with your business too. And understanding your financial line in the sand. So say, for example, you might only have 100K equity, but you've got 500K borrowing. Well, then your line in the sand is a deal worth $600,000. And can that buy you a deal right now? Well, it depends on the areas and where you're looking. But with development, and I don't actually use any of my own money to do all my deals. So I use money partners, which are joint venture partners or investors, and the bank. So that's why I say there's no one size fits all, because some people are comfortable with, they want to do a deal in their own right, and then it's a matter of assessing what their pool of funds is, and then finding a deal that can fit that pool of funds. Or you can choose to use money partners and joint venture partners, where you have a money partner provide the equity and someone else provide the debt, or you can provide the debt, or you can have someone provide the whole lot. There's really no one size fits all. So your capacity is only limited based on your own creativity and your own imagination to be able to tap into the resources of those around you as well. So all of my deals are funded with money partners and joint venture partners, and the banks. So I don't actually use any of my own money to do the deals. I use my own money for other investing and other creative pursuits. So that's why if you don't have any money, it does not mean you cannot get into development. It really depends on your capacity, your capacity to want to go out there and do deals and leverage your network as well.
Makes a lot of sense.
That's one strategy if you want to go and do deals. But also, if you don't feel quite comfortable, if you're constrained with money and you don't quite feel ready to do deals in your own right yet, there's other cash flow strategies that I teach as well. So one is actually going out there and finding deals, development deals, and then flicking them on to developers for a spotter's fee. You can do that. Or otherwise, you can take those skills, the fundamental skills that I teach, and actually project manage other people's deals as well. So there's some people out there that are time poor, they don't want to get involved in running a project. there's plenty of project managers out there that can actually run a deal for you as well. So there's plenty of strategies out there looking for deals. And I find that when I'm out there looking for deals, you build up momentum, right? And then you find a deal and you're pretty much out of the market for a certain period of time until you're ready to go again. But the momentum still keeps sending deals your way. And that's a great opportunity to go, okay, well, I can't take this on. How about you? And let's, pay a spotter's fee.
Makes sense. Beautiful. Great. So you mentioned money partners and joint venture partners.
Mm-hmm.
Is there a certain expectation that they have in terms of a return on investment? Because obviously it's an investment from them, particularly if they are going to be passive.
Yeah.
So what are we talking about in terms of their incentive for providing the funds?
So once again, there's no size fits all. So it comes down to the needs of the investor and also what the project can actually financially support. So like with my investors, I mean, I always do a double-digit return because you want to make sure that it's more incentive because it's a higher risk, so you want a higher return, right? So I always make sure it's at least double-digit. But then some people are quite happy to take 8% in a market when there's only 3% interest. Some people are happy to take 8 or 9. So it really depends on the viability of the project, how much fat you've got in terms of how high your interest rate is. When I first started out, I used to offer 20% flat interest on my money partners. And then with joint venture partners, that really depends on who's contributing what. So does someone want to just be an armchair developer and say, okay, here's my pot of gold, you go and do a project and we split it 50-50 or 70-30, or it really depends. It comes down to a conversation with your investor and your joint venture partner about what their needs are, understand their needs first, and then looking at what your needs are and what the project can actually financially support, and then negotiating and coming to a situation where it's win-win for both people. Otherwise, don't bother. My solid philosophy, everything has to be win-win or you just don't bother.
Yes, this is super interesting. I'm fascinated by this space. So given your success and the number of projects that you've done, why not these massive, large-scale developments? Why aren't you building 100-unit complexes, and why are you staying into this niche, small development space?
Because it's too, I hats off to anybody who does apartment buildings. I think they're amazing, but too risky for me. Like, I've got a risk profile. I understand it. I respect it. And I also don't feel the need to, this model, I like to keep life simple, right? So yeah. I've got a model that works. So if something's not broken, don't fix it. I'm happy doing a number of small projects. I'm okay with banking 6-figure profits a couple of times a year, right? That's more money than I need. I'm okay with that. So I don't feel the need to do a massive project. I'm actually doing my biggest project at the moment, which is a 10 site, and I've got no desire to go anything bigger than that. 6 is previously my largest. This has probably been my largest. This will be my largest ever. But the reason why I'm comfortable with it is because it's creating quality of affordable housing for a market that is screaming out for accommodation. And so I've got a lot of comfort around my exit strategy for doing those 10. And if I wasn't very comfortable that I can move this product on really, really quickly, given we've got a starving market, then I wouldn't even think about doing 10, right? So I don't have aspirations to do. I'm comfortable with what works. This is a lifestyle business for me, so I'm very conscious of that. I could do 10 projects if I wanted to. 3 to 4 is a nice manageable amount. Manages my risk comfortably. It manages my time comfortably as well. And yeah, I can then spend the rest of my time supporting my students. So
I love it. And I think that aligns with our audience and our clients. They're not looking to do these huge development sites. And I think that idea of that lifestyle business, that's our ethos as well. So I think that's fantastic. So let's talk a little bit about the specifics of the program. So if somebody is interested in this, they can see that it's an opportunity for them to accelerate their wealth. What's the process like when you work with them, and what can they expect working with you?
Yeah, sure. So I have my main program that I have is called the Rising Star Inner Circle. So it is by application only. So I always want to make sure that I've got the right people that I can help in the community. I'm not interested in just taking people's money and then someone not doing anything with it. I actually really want to make sure I've got a community of people who I can actually help, that are willing to do the education and actually go out there and implement the education and have my support there. So when people become part of the Inner Circle, I teach them firstly how to do property development, the A to Z. So it's a 6-module online course that teaches them firstly how to build your team, your A team that supports you. Firstly, we talk about all the key elements of risk. And then we go into understanding the type of deal that suits them and their circumstances, because everyone is different. And then we go out there and actually teach them how to go and find deals, how to crunch the numbers behind the deals, how to research what type of product to create, because we're not creating product for us, we're creating product for other people. So understanding and doing that research to make sure that we're creating the right product, but they're also choosing the right site where people want to live, and we're managing all of our risks around that. Then we go into understanding our approvals. How do we get our approvals in the fastest possible time? Because that can be a pain point, and making sure that we choose a site where we can actually do what we want to do as per our feasibility. So managing them through that. Then go on to how to fund deals. Are we going to fund using our own money? Are we going to use money partners? And explaining the elements of being able to fund your deal and how you manage the cash flow of a project. Then we go into the construction side of it. How do we go and build it? How do we manage the builder? And then we go into the sales and marketing side. How do we get out of our project? And we build our exit strategy before we even start building. So we talk around how we're going to get out of our project as well. And then we wrap up with how do we capture our learnings? How do we get to settlement, get the cash in our bank account, take the learnings, and then rinse and repeat and go again? So that's the fundamentals of the education. So it's video based, short, everyone's time poor, 10 to 15-minute videos to get the knowledge in people's heads as quickly as possible. And you can do a module a week. In 6 weeks, you can actually understand the whole process from A to Z as to how to do development. And so it's structured at a high level so people can understand the concepts and really see from start to finish how it all works. And the next level of knowledge unfolds when you start taking those learnings and then going out there and finding a deal and going out there and filling out your feasibility and going through that whole journey of finding your deal, working out how to engage money partners if that's a path you want to go, how to make sure we're choosing the right money partners. So not all money's equal. We don't want to be working with someone that's going to micromanage us and make our journey quite painful. We're choosing the right people. So just managing people and supporting people throughout that whole journey. And then we have coaching calls twice a month, where I just came off one half an hour ago, where all students can come in and get their questions answered. But what I find is amazing about these coaching calls, and you'd understand this in your business as well, and from our knowledge learning in the past, is the power of group learning. So people get their questions answered, but they also get to hear questions of other people, which I believe fast tracks people's knowledge, because you're hearing about people at stages. You might be looking for a deal, right? And you're hearing from someone who is mid-construction and they're getting a variation. They're not quite sure how to manage it with their builder, and I'm sharing how to do that. Or there might be someone who's about to settle a project. They're not quite sure how to do the handover of their project to the purchaser. You're right at the beginning, right? And you're hearing all of this. You're hearing about people who are doing various different types of deals, whether they're doing disability housing, or they're just doing a single house on a block and it's really lucrative for them, or they're doing developments near a hospital and they've managed to be able to keep all the houses and they're renting them out to doctors and nurses. Like, just being able to get exposed to all that breadth of knowledge from other people doing stuff is so powerful. So twice a month I do those, and they're all recorded so people can listen to them, and anyone that joins can listen to the vault right from when we start. So there's just so much gold in that. And then everyone gets a strategy call with me. So we can either do that front where they need some help to guide them as to which way to start, or otherwise we can deep dive into a deal, go through a feasibility, work through that, deal with their challenges. And then we've got the private Facebook community where people are connecting. We've got people who found money partners. We've got people who are engineers, designers, all walks of life, all different skill sets. And one thing that's been really important to me is to create a space of abundance where we're there to share, and there's plenty of opportunity out there for everyone, right? So yes, people are learning about development, but everyone's at different stages. Some people are ready to do a deal, some people aren't. Some people can do a bigger deal, some people can do a smaller deal. There is plenty of opportunity out there. And I've really created this safe space in the Facebook group where people can go in there, and if they're having a challenge, they can go, okay, hey, I need some help here. Can someone help me out? And I'll help them out. But more often than not, other people have already jumped in and gone, hey, don't worry about it. It's going to be okay. Just keep doing this. And so when you do development, right, when you're at home and you're doing this thing, when you're plugging away at home and working on your business, right, it can be quite a lonely journey. And like when I baked this profit the other week, it's like, yay, I've got 7 figures that just hit in my bank account. Who can I share?
Who do I tell?
No one else gets it. Whereas when you're part of a community, and what I do every year I've got a 6 and 7 figure club. So every year, anyone who's banked 6 figures or 7 figure profit, let us know. We share the deal details and then we celebrate them and go, you know what, that is so awesome. And now people are motivated to go, you know what, next year I'm going to join the 7 figure club. I'm going to join the 6 figure club. And just being able to have that, have people that understand what you're going through and the journey that you've been on to celebrate you as well. I think it's a really powerful thing.
That's amazing. Yeah. And this is the value of community, right?
Yeah.
As you said, business is lonely. We're limited by our own perspective or the perspective of the people around us.
Yeah.
So being surrounded by those people who can elevate that knowledge and that experience and distill it so it shortcuts the journey. It has to. And that's just what it's all about. So my last question for you is that all of this knowledge is great. This is all fantastic, but obviously property development takes time. Building doesn't happen overnight. We're not banking these profits straight away. So I'd love to know, on average, how long does it take your students to, say, find a site, assuming that they've got their funding and they've got all of that sorted? And then secondly, what's the typical time frame from settling on a site to then making the profit? So we can set some expectations around timeline for people.
Yeah, for sure. So, and once again, it's not one size fits all. It depends on where they're at their journey when they're joining. So I tend to find most students will take 6 to 12 months to find their deal, depending on how much time they've got available. So the first part will be learning about how to do property development, and then fine-tuning their feasibility, looking at deals, crunching deals, putting offers on, missing out, and then fine-tuning their craft. And then you'll actually reject quite a lot of deals, and then one will drop and it'll be like, hang on a second, this is so obvious. So that process and that of going through that and finding deals and passing them on, it refines their skills so much more as well. So when that deal comes along, they reflect and go, hang on a second, I've learned so much in that process too. So typically 6 to 12 months. Some people have joined and found a deal in 3 months. It just depends on where your starting point is. Sure. And then in terms of, I work out my time frames basically from settlement to settlement. So you may find a deal, right, but you may have an extended settlement before you settle on the land. So that might be, 6 months or 30 days, depends. So I always go, my time frame is from settlement to settlement because that's when my cash is in. Yes. So most people, depending on what state you're in and what your council's like, it can be anywhere from 12 to 18 months to 24 months. So if you're doing a smaller single house, it could be 12 months in and out. I've had many deals that have been 11 to 13 months. I've had some deals that have been 18 months. 18 months tends to be around the norm from settlement to settlement. And then I've had some that have been 24 months and some that have been 30 months. So it depends on the nature of the dynamic, like whether you've got COVID or whether you've got
of course, so many variables.
Yeah, so it's not a get rich quick scheme, absolutely. It's something that you can work on the side of your current job. And there's one philosophy that I always say to all my students is, and it's something that I learned from one of my educators. He said, don't go quitting your job until you bank 2 times your income. And that's something that I impress upon my students as well. So if you are not loving your job and you're seeing this as a way to get out of your job, then you want to make sure that you've banked some profit, you've got some cash in there to make sure that you can do this as a viable business, you can still put food on the table, managing our risk in broader life as well. And then you've got that profit there, then make the choice to be able to say goodbye to your job if you want to. So
beautiful. Makes a lot of sense. Amazing. Well, so if anybody's listened or watched this, Amanda, and they want to get in touch, what's the best way for them to reach you?
So you can have a look at my website. So it's risingstardeveloper.com.au. So you can go and have a look on there. I've got some great free resources. I'm also on Instagram, Rising Star Developer, so you can have a look in there and connect. Certainly, if you connect, make sure you let me know that you've seen this podcast and where you come from, because it's great to be able to connect where you first found me. And yeah, there's lots of free resources on there and you can reach out. Otherwise, you can also email my team at connect@risingstardeveloper.com.au. We've got some amazing resources to help people even just understand the concept of property development. I've got a great 30-minute free web class where it just explains how to start and the basics of property development to even work out if it's for you. So yeah. Hopefully that
beautiful, awesome. We'll include all those links in the show notes, mate. This has been super valuable, even just for my own curiosity to understand the model, the philosophy, and your system. So I appreciate you being so generous with your knowledge. And guys, if you've watched or listened to this and you've got some good ideas from it, just remember, a good idea in theory remains exactly that, just a good idea until you implement it. So if this sounds like it's for you, make sure you do your investigations, get in touch with Amanda and the team, and see what the opportunities could hold. Mate, I appreciate you making the time, and I'm looking forward to catching up again soon.
Sounds great. Thanks, Jackson.
Catch you soon.
Bye.